So we are doing this dissolution of partnership, the very basic thing. When I'm talking about dissolution, what does it mean? You all can speak. Dissolution means what?
When the business shuts down.
Yeah, when the
When
business
the
is like
business
closed.
shuts down, or I would say there is a closure of the firm. So when I am doing dissolution, the firm is closing. I am repeating again, the firm is closing. That means everything that is there with the firm has to go away.
Yeah.
Yeah.
If I talk about the balance sheet, okay, if I talk about the balance sheet, or I would say I talk about the statement of financial position. If I am talking about the statement of financial position, can you tell me what is there in the statement of financial position?
The
Yeah.
non-current assets, the
You will have
current
the
assets.
partner's current, you will have your partner's capital accounts.
Hmm.
Apart from this, what else will you have?
The current assets, current liabilities,
You will
non-current
have all
assets.
your assets, you will
Yeah.
have all your liabilities. Are you with me?
Yeah.
Okay, come on. Tell me all these assets belongs to whom?
Pa-
All these assets belongs to whom?
The
The partner.
business.
Business or partners? Business is shutting down. Who has made the business?
The
Oh,
partner.
Yeah? The
The,
partner.
partners have made the business. The partners have invested in the business.
hmm,
So all these assets ultimately belong to whom?
the partner.
The partner.
It ultimately belongs to the partners. But can they take, if the business is shutting down, can they take away all the assets directly home?
No.
If the business is shutting down, can they take all the assets directly to their home?
No,
No,
they
they
need to
can't.
divide it.
They need to divide it. What about the
Hmm.
liabilities?
That will also need to be
Yeah.
divided.
Hmm?
That will also need to be divided.
That will also need to be divided. That means divided, or you will have to pay.
Might have to pay them off.
Yeah,
Yeah.
you might have to pay them off. So that means you have to first sell the assets, right?
Yeah.
Yeah.
After selling the assets, whatever money you receive, say for example, you have received 100,000.
Hmm.
Say for example, you have received 100,000. Okay, and you have to pay 50,000.
Hmm.
Okay, so you receive 100,000, you pay 50,000, you will have the balance 50,000, and this balance 50,000 has to be divided.
Within the partner.
Yeah.
So can you sum up a little bit story?
So the dissolution of partnership is basically the closure of the firm. So we have the balance sheet where there's a partner's capital account and the assets. So we have to pay back the liabilities, and they do that by selling the assets.
Okay, so basically, when the firm is dissolving, the very first thing that you have to do is you have to close the balance sheet. You have to dissolve the balance sheet. First thing you keep in mind, when the firm is dissolving, the balance sheet also has to dissolve. That means everything that is there in the balance sheet would go somewhere or the other. Are you with me?
Yeah.
Yeah.
Okay. So everything in the balance sheet would go somewhere or the other. You will sell the assets, you will pay the liabilities, and whatever is balance, you will distribute it amongst the partners. First, get this thing very clear.
Hmm.
Okay. Why the
Yeah.
partnership would dissolve? This is some theory. Maybe a partner has died, or maybe the partnership firm has become bankrupt, or maybe there is disagreement between partners. So these are the reasons why the firm dissolves. Okay. So when I'm talking about dissolution, there is a step-by-step process. You prepare 3 accounts when you dissolve the firm. The first account that you prepare is a realization account. What is a realization account? Realization account is basically a person who is dealing with the dissolution process. When I say is a person who is dealing with the dissolution process, that means he is going to take all the assets under his custody. This
Okay.
person is going to take all the assets under his custody and he is going to be responsible to pay all liabilities. Okay? Liabilities to pay or not to pay, even if it is not mentioned, you are going to pay the liabilities. This person is the person who would be appointed by the court or by the partners whenever there is a process of dissolution happening. The realization would be a person who would take all the assets, who would take all the liabilities. So the first thing this person would do is he would take it. Okay. Then what he would do? He would sell the assets. First he would take it, then he will sell the assets. After selling the assets, what he will do?
Pay the
Pay the
liability.
liability.
After selling the assets, he is going to pay the liabilities. After paying the liabilities, he is going to charge his expenses. When he is going to charge his expenses, these are called the realization expenses.
Okay.
What is it called? When he is going to charge
Realization.
Realization.
expenses, these are called the realization expenses. So he will charge the expenses. Then whatever is the balance, what will he do?
Distribute.
He will distribute amongst the partners. Are you with me?
Yeah.
These
Yeah.
are the things that will happen in the realization account. Okay. Let's take you back. Whenever there is a process of realization, what is the first thing that you will do?
They'll take all the assets and liabilities.
The first thing that you are going to do is you are going to dissolve the balance sheet. Or you
Okay.
say you will dissolve the statement of financial position. That means you're going to empty the balance. Whenever there is any dissolution that is happening, what is the first thing that you will do?
Is
Empty.
all.
Empty the balance sheet. Okay? All the assets will take away.
Yeah.
Who will take away all the assets?
The person who's appointed by the business.
Okay, who will take away all the liabilities?
The partner.
So the same person, they will like sell the assets and then pay off the liabilities.
The same
And then
person will take away all the assets, the same person will take away all the liabilities.
they will add the um, realization expense to it. And whatever the balance is, they will distribute it amongst the
No, no, no,
partners.
no. First, you're going to dissolve the balance sheet. Is this correct?
Yeah.
Okay.
Yeah.
Yeah.
All the assets, who will take away?
The person appointed by the
The
business.
person appointed. All the liabilities, who will take away?
Same person.
Same person. So the person appointed is going to take the assets. The
Hmm.
person appointed is going to take the liability.
Yeah.
After that, what will happen?
They'll charge the expenses.
Then he will sell the assets,
Oh, well,
pay the
okay.
liabilities. First,
Hmm.
he will take, then he will do. Are
Okay.
you with me? Okay, come on.
Yeah.
Yeah.
Tell me what happens in the dissolution process?
So first thing is you dissolve the SOFP.
Hmm.
Then the person you've appointed takes the assets and the liabilities.
Hmm.
Then they sell the assets and pay off the liabilities.
Then,
Then they charge the realization expense.
then,
And then whatever balance is left, they distribute it amongst the partners.
Ashita, I hope you are with me.
Yeah.
Okay, so this is the process that is going to be followed. You exactly need to know what are the things that you are going to put there. Okay, now understand you have your balance sheet, or you say you have your statement of financial position. If you are having your statement of financial position, if you have your statement of financial position, your partner's current account will be capital account would be here. After that, you would have your non-current liabilities, you will have your current liabilities, you will have your non-current assets, you will have your current assets. Are you with me?
Yeah.
Hmm.
You might also have some reserves and surpluses. You are going to do the entire dissolution process in three accounts. The first account would be the realization account. What is the first account?
Realization account.
Realization
Realization.
account. The second account would be cash bank account. And your third account would be your partner's capital account. Okay. Now you have to strategically think what will go where. The capital account balances of the partners belongs to whom?
To the partner.
To the partners. So this will
Yeah.
go back where?
Partner's capital account.
Which side?
Credit side.
Credit side. Are you with me?
Yeah.
Okay. Before I proceed ahead, this is the liability section and this is the asset section. Tell me all liabilities have what balance?
Credit balance.
All the liabilities have a credit balance. All the
Hmm.
assets have what balance?
Debit.
Debit balance.
Debit balance. So everything that is on the liability side would go somewhere on the credit. Are you with me?
Yeah.
Hmm. Yeah.
Everything that is there on the liability side would go somewhere on the credit.
Hmm.
Everything that is there on the asset side would go somewhere on the debit. Because you're
Hmm.
dissolving it, because you're dissolving the firm, the first thing that you have to do is you have to empty your balance sheet.
Hmm.
So first thing is that you're going to remove everything from the balance sheet. So partners capital account belongs to the partners. You will put it over there. Are you with me?
Hmm.
Yeah.
Anything that is there, reserves and surplus, it belongs to whom? What is reserves? What is
Reserve
reserves?
is reserved the earnings that is kept aside in the business.
Undistributed profits.
Yeah.
Undistributed profits belongs to whom?
The partner.
So whom will be given to if the firm is dissolving?
It'll be
Part.
distributed now.
It will be given to the partners, it will be distributed. Are you with me?
Yeah.
Hmm.
What comes under the reserves would be the general reserves, workmen compensation fund, investment fluctuation fund. All these things comes under the reserves, retained earnings,
Hmm.
securities premium. So all these things that are there would be given to the partners. Okay. Let's talk about the cash bank. Are you making a separate account for the cash bank?
Yeah.
Are you making a separate account for the cash bank?
Yeah.
So where will the
Yeah.
cash bank go?
In cash bank account.
Which side?
Debit side.
Debit side.
On the debit side. Okay, fine. Very good. Now, how about the assets? Now, these are called the remaining assets and these are called the remaining liabilities. First, you give away the partner's capital account to the partners. You say them that this is your capital, please take away. Are you with me?
Hmm.
Yeah.
Second thing that you do is whatever reserves are there that belongs to the partners, you give it away to the partners and you tell them this is the reserve that is belonging to you, please take away. These are the undistributed profits that is kept in the business, please take away.
So you're talking about the reserves right now.
Reserves. So the
Okay.
capital account would go to the partners.
Hmm.
Reserves would go to the partners.
Okay.
Yeah.
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 Cash bank account, because you're making a separate account for the cash and bank, it would go on the debit of the cash and bank account.
Hmm.
Are you with me?
Yeah.
Now, whatever is left back over here, it is called the remaining assets.
Okay.
Whatever is left back over here, this is called the remaining liabilities.
In
Someone
the
tell me?
SOFP.
Yeah, in the SOFP.
Okay.
Okay, in your SOFP, whatever anything other than the partner's capital, reserves, and cash bank. So, whatever is left on the asset side, what is that called?
The remaining.
It is called the remaining assets. What is it called?
Okay.
Remaining assets.
And this is called the remaining liabilities, whatever is left. Who's going to take away the remaining assets?
Let the distribution equal.
Who's going to take away the remaining assets?
Will be distributed.
Yeah.
I told you there's a person in charge who's going to take it.
Yeah, the person they appoint will take the
The
remaining
person
assets.
in charge is first going to take it.
Hmm.
He will take the assets, he will take the liabilities. Do you remember this?
Yeah, yeah, yeah.
Then he will sell the assets, pay the liabilities. Do you remember this?
Yeah.
Yup.
So, who's going to take the remaining assets?
The person who we appoint.
Person who will appoint. So, the
Hmm.
remaining assets, this is the person whom we appoint, for which we make which account?
The realization account.
Realization
Realization
account.
account. So, all the remaining assets would come on the debit side.
Hmm.
Okay. I
Yeah.
told you, when you're emptying your statement of financial position, everything that is on the debit would go somewhere on the debit.
Hmm.
So all the remaining assets would be transferred to the debit of realization account.
Hmm.
Okay. All the remaining liabilities would go where? It would go on the credit of realization account.
Yeah.
These are called transfer entries to empty the balance sheet. I'm giving you time. Write it the way you want. Write it the way you understand. Transfer entries will only have one effect. Everything of the debit would go somewhere on the debit.
Hmm.
Everything of the credit would go somewhere on the credit.
Hmm.
After you empty the balance sheet, the next step starts, which will start with two effects of everything. Okay? So the remaining assets would go to the realization account, debit side.
Yeah.
Remaining liabilities would go to the realization account, credit side.
Hmm.
Yeah.
Now, what will you do? What will the person do?
The person will sell the assets and then pay off the liabilities.
Yes, so he will sell the assets, he will pay the liabilities. Now, understand this logic and sequence clearly.
Hmm.
Okay? Assets are here.
Yeah.
Where are you going to sell it?
In the realization part.
In the realization account only, because the assets are over here. If you're
Hmm.
selling it, you will sell it on the opposite side.
Hmm.
If
Okay.
you're selling it, you're going to sell it on the opposite side. So I am writing sell assets. Okay?
So, why is it an
When
R
you're
dot
selling
A?
the assets, you are going
Remaining
to write
assets.
cash bank over here.
Okay.
What are you going to write? Cash bank over here.
Cash bank.
Because when you're selling the assets, you would receive money, right?
Yeah.
When you're selling the assets, you would receive the money. So you will write
Hmm.
cash bank over here, and whatever is the name of the assets, you will write over here. Name,
Okay.
amount, name, amount, name, amount. Are you with me?
Okay. Yeah.
So you're selling the
Hmm.
assets. So it's a realization credit. Can you tell me where will it be debited?
Realization debit. Cash bank credit.
It is on the realization credit, dear.
Hmm.
You're selling the assets, right?
Yeah.
Yeah.
Since you sold the assets, it is realization credit.
Yeah.
So the assets are here, you sell
Yeah.
over here.
Hmm.
I'm repeating. Assets are here, you
Yeah.
sell over here.
Hmm.
Here credit, where
Yeah.
debit.
Cash bank account.
It will be debit in the cash bank. So in
Hmm.
the realization account, you wrote cash bank. So in the cash bank account, what will you write?
Realization.
In the cash bank account, you will write realization.
Okay.
In the cash bank, you will write realization and you would write the name of the assets 1, 2, 3, whatever is the name of the assets. 1, 2, 3, you will do the total. You will do the total and write it outside. So this is
Hmm.
selling the assets. Are you with me?
Yeah.
Yeah.
Okay. So assets are here, you sell over here.
Hmm.
Realization credit, cash bank debit. We
Yeah.
always be passed simultaneously if you're making both the accounts. Year credit, year debit, year credit, year debit, because all the realization parts would be given in adjustments. Everything after emptying the balance sheet would have two effects. Are you,
Okay.
am I clear?
Yeah.
Yeah.
Everything after emptying the balance sheet would have two effects. So realization credit, cash bank debit. I'm giving you a note over here that would be the master note. You should remember that you are going to sell only those assets that are mentioned.
Hmm.
If they do not mention you that they have not sold any asset, don't sell it, leave it.
Okay.
Okay? You are going to sell only those assets that are mentioned. They should clearly tell you that it is sold or it is
Hmm.
realized. They will give the word. It is
Hmm.
sold or it is realized. Are you
Yeah.
with me?
Yeah.
Yeah.
Okay. Maybe some assets are really very good and the partner wants it for himself.
Hmm.
So can he take it?
I think we can buy it.
Yeah, the partner can buy it, right?
Yeah.
So the assets are here.
Hmm.
Of these assets, some assets can be sold for cash.
Yeah.
Some asset partners can also buy, right?
Yeah.
So whatever you want to do for the assets, even if you're selling it, it would be realization credit. Even if the
Hmm.
partner is taking away, it would be realization credit.
Hmm.
So what will you write over here? If it's
Part.
not sold, it is going to the partner. So you will write partner's capital account.
Hmm.
Okay? Whatever
Yeah.
asset the partner is taking away, write it, put the amount outer column. Are you with me?
Yeah.
Yeah.
This is called assets that is taken away by the partners. What is it called? Assets
Assets.
Assets that is taken away by the
taken
partner.
over by partners. Are you with me?
Yeah.
So this is realization credit.
Yeah.
Where debit?
Partners capital account.
Sorry?
Partners capital account.
Yes. So it's realization credit. So partners capital account debit. In
Yeah.
realization, you wrote partners capital account. So in
Hmm.
partners capital account, what will you write?
Realization account.
In realization, you wrote partners capital account. So in partners capital account, what will you write?
Realization account.
You will write realization account and in the bracket, you will write the name of the asset. Whatever A, B, C, whatever asset it is, you will write the name. Are you with me?
Yeah.
Yeah.
They might ask you to give journal entry also. Can you give me the journal entry for asset taken over by the partner?
Partners capital account debit and realization account credit.
Very good. You will take the account where it is. If it is on the credit side of realization account, you will say realization credit. So partner's capital account automatically will become what? Debit.
Debit.
Are you with me?
Yeah.
Realization credit, partner's capital debit. Is this done?
Yeah.
Okay, fine. So remaining assets here, remaining liability here, asset here, sell here, or give it to the partner. If I'm selling, realization credit, cash bank debit. If I'm giving to the partner, realization credit, partner's capital debit. Are you with me?
Yeah.
Okay, so this is done. For assets, you need to remember one pointer. Sell only those assets that are mentioned.
Okay.
Okay? Sell only those assets that are mentioned. Now what will you do?
You close the account.
Assets are sold. Now what will you do?
Oh, you sell the pay back the liability.
Now you have to pay the liabilities. Now assets are sold. Now you come to the liabilities.
Hmm.
Liabilities here. Where will you pay?
On the debit side of the realization.
If the liabilities are here, you are going to pay it on the opposite side. Are you with me?
Yeah.
Liabilities here, pay it over here. So I am mentioning that I am going to pay the liabilities. So first I sell the assets, then I pay the liabilities. So if I'm going to pay the liabilities, what I'm going to write over here?
Cash or bank. And then the
Cash
name.
or bank. You're going to write cash bank. You're going to underline. You will write the name of the liabilities that you're paying and the total year. Are you with me?
Yeah.
Year debit, where credit?
In the cash bank account.
Year debit, cash bank credit. Are you with me?
Yeah.
In realization account, you wrote cash bank. So in cash bank account, what will you write?
Realization.
In cash bank account, you're going to write realization. You're going to write the name of the liabilities that you're paying. Liability 1, liability 2, liability 3. Whatever is the name of the liability, you're going to write it and you're going to pay it. Can you give me the journal entry for paying the liability?
Okay. Realization debit, cash bank account credit.
Realization debit, cash bank credit. Ashita, are you with me?
Yeah.
I'm giving you another hint over here. Assets sell only those they are mentioned. For liabilities, I'm giving you another hint. Pay all liabilities mentioned or not.
Okay.
Okay.
Even if they don't tell you that I have paid this one, you are still going to go and pay it. They mention about paying liabilities or they don't mention about paying liabilities, you will go and pay.
Okay.
Are you
Okay.
with me?
Yeah.
Yeah.
Also remember, you are going to pay only outsiders' liability. Whose liability?
Outsiders.
Outsider.
Suppose my partner is Ashita and Aira.
Yeah.
Ashita's husband is outsider or insider?
Outsider.
Outsider.
Outsider. So even if it is the partner's wife or partner's husband, his liability will be paid. But if it is the partner's loan, that you will not pay over here in realization. Are you with me?
Yeah.
So I am specifying this word outsider. Sometimes they say ex loan. So that liability you will not pay. But ex-wife loan, you will pay her.
Okay.
Okay,
Normal
think
loan you won't pay.
that way. It should be paying outside liabilities.
So bank loan you won't pay.
Why bank is not outsider?
Yeah, it is.
Or he's your relative?
Oh, okay. Right.
Have you done something? Okay, fine. So you are going to pay outsiders liability. You're going to pay all the outsiders liability, mentioned or not mentioned, paid, because we are not robbers. Okay?
Yeah.
Okay. There may be chances that a partner might want to pay it.
What? No?
There might be chances that a partner would want to pay the outsider from his own
Hmm.
pocket.
Hmm.
In that case, what will you do?
You will write it in the realization account on the debit side as partner's capital account.
So if the
And
partner is going to pay from his own pocket, what will I
hmm,
write?
partner's capital account on the debit side.
You will write it on the debit side. What will you write? Come on, Ashita, you can also start thinking.
You will write partner's capital account.
You will write partner's capital account,
Yup.
liability 1, liability 2, whatever liability he's paying. Okay. Here a debit, where credit?
Partner's capital account.
Partner's capital account. Remember, I'm saying again and again, after the transfer entries, every entry will have two effects:
Hmm.
realization cash bank or realization partner's capital. So I'm paying the liabilities. In realization account, I have written partner's capital account. So in partner's capital account, what will I write?
Realization account.
Yeah.
Realization account. Write the name of the liability in bracket, and whoever is paid, put it in their column.
Hmm.
Hmm.
Come on. What were the steps for realization?
Uh, the partner takes all the assets and liabilities,
Hmm.
sell the assets, pay
This
off the
is taking the
liabilities.
assets.
Huh?
This is taking the liabilities.
Hmm.
Let's see it in the account.
Hmm.
This is the person. The first would be empty the balance sheet.
Yeah.
When you're emptying the balance sheet, write partners capital account credit side, cash bank account debit side as balance begin down.
Hmm.
If any reserves are there, give it away to the partners.
So these balances will be given to us.
Yeah, the
Yeah.
balance sheet would be given to us.
Okay.
Then you will be left with what? You will
The
be left with
remaining.
the remaining assets and remaining liabilities.
Yeah.
This is the person.
Hmm.
Remaining assets would go where?
In the realization
In
account
the
on the
yeah, in the realization account.
Which side?
debit side.
Debit side.
Remaining liabilities would go where?
On the
Credit
credit side.
side.
Realization account credit side. Which value?
Which value?
Hmm.
Remaining value.
Yeah.
Book value.
Okay.
When I say book value, means the value that is given in the balance sheet.
Okay.
Okay? Value
Yeah.
Hmm.
given in the balance sheet. Then what do you
Hmm.
do? Remaining assets, debit side, remaining liabilities, credit side. Then what you do?
Then you sell the assets.
Sell the assets. Assets
Yeah.
here. Where will you sell?
On the credit side of the realization account.
Either you sell or partners take away.
Yeah.
Hmm.
Your credit, your debit,
Hmm.
Yeah.
or your credit, your debit.
Hmm.
Which value?
Book value.
No.
No?
This would be, they will give you the value at which it is sold.
Okay.
Okay?
So
They
the
will give
selling
you
price
the
basically.
value at which it is sold,
Yeah.
and you will only sell those assets that are mentioned. If any asset is not mentioned, forget about it.
Okay.
Am I
Okay.
very clear?
Yeah.
Okay. Sell the assets or partners take away the assets. Then what?
Then you uh, pay back the liabilities,
Then you pay back the liabilities
or the partners pay off the liability.
so your debit, your credit,
Hmm.
or your debit, your credit at the value that is mentioned. What is the hint for liabilities?
You have to pay all of them. अगर mention नहीं है, then also.
Pay the liabilities even if not mentioned. Then I
Yeah.
am on the realization account. What will happen to the realization account? Come on, what will happen to the realization account? After you pay the assets, first the realizer will take it.
Yeah.
After he takes it, what will he do? He will take the assets, take the liabilities, sell the assets, pay the liabilities. Then what?
Um.
Will he do this all for free?
No charge expenses.
So I've been telling you all, I gave you time to write. Then what takes you all so much of time to recall? Okay?
Hello.
Hmm.
Understand. First, he will take the assets, take the liabilities. Sell the assets, pay the liabilities. First take, then sell, then pay. Then he will charge his expenses. Can you tell me who's going to pay the expenses?
Who's gonna pay the मतलब the partners?
Okay, so what would be the entry? He's going to charge expenses, right? So cash bank would be credit
Yeah.
and expenses would be charged to the realization account.
Yeah.
So you will write over here realization expenses and this would be paid in cash bank.
Okay. Yeah. Hmm.
Okay, this is the amount that the realizer would charge.
Miss, where are you putting this realization expense?
Realization account.
Okay.
Okay, so it would
On which
be
side?
debit side, debit all
Okay.
expenses and
This is
losses.
and losses. Yeah. Okay.
So your debit, your credit.
Hmm.
They will not give you, they would say only the expenses for realization amounted to this much.
Okay.
Okay,
Hmm.
Yeah.
after you do this, your closing comes.
Hmm.
See, you transferred assets, transferred liabilities, sold the assets, paid the liabilities, paid realization expenses. Are you with me?
Yeah.
Yeah.
Then your closing starts. First, you will close which account?
The realization account.
First, you will close the realization account. Okay?
Hmm.
Whatever is the profit or loss on realization, what will you do?
You will put distributed in the partner's capital account.
So, whatever is the profit or loss on realization, transfer to partner's capital account.
Hmm.
Yep.
You know it always works in the cross section, right?
Hmm.
So you will close the account. You will close the account. If you
Hmm.
have a profit on realization, it will come over here.
Hmm.
Yeah.
If you have a loss on realization, it will come over here.
Hmm.
Are you with me?
Yeah.
Yeah.
Either you can have profit on realization, loss on realization.
Hmm.
So first account that you close is which account?
The realization
The
account.
realization account.
Realization account. First close realization account, transfer the balance to partner's capital account. Are you with me?
Hmm.
Yep.
Then you will close what?
The cash in bank account.
Then you will close the partner's capital account.
Hmm.
So here you would have profit on realization, or here you would have loss on realization.
Yeah.
Then the second closing. Close partner's capital account. Which account?
Partner's capital account.
Partner's capital account can have any balances. It can have a balance over here or it can have a balance over here.
Hmm.
Will you write balance? Will you write balance?
Uh, Miss, I didn't understand the
Yeah,
question.
even I
Will
didn't
you write
understand.
balance?
Yeah, you
Balance of cash or bank?
Hmm?
What are you saying? Which balance will we write?
The partner's capital account, will you write balance close down?
Yeah, you'll write.
yeah.
You're making a new balance sheet.
No, you're
Oh,
not.
no, you won't.
So it's
You're
supposed
not
to.
making a new balance sheet, right?
No,
Yeah.
no.
Okay, so you're not making a new balance sheet. That means there will be no balance written, but whatever is the balancing figure,
Hmm.
you will pay through cash bank.
Okay.
So you will
Okay.
transfer the balance to cash bank account.
Hmm.
Okay? And
Yeah.
third thing, you will close your cash bank account. You will close your cash bank account and cash bank account will tally.
So both cash bank and partner capital account are supposed to tally.
No. See now, look over here. You will have partner's capital account and you will
Hmm.
have cash bank account. You have two partners A, B.
Hmm.
Suppose A has a balancing figure over here. You know how to get the balancing figure. It's right,
Yeah.
right? So
Yeah.
Yeah.
instead of writing balance closed down,
We will write
you
cash
are going
bank.
to write cash bank. So it's debit over here. So this will go to the credit over here.
Hmm.
And here you will write partner's capital account, whatever,
Hmm.
A's capital account or B's capital account.
Hmm.
Suppose B is getting a balancing figure here. So you will write cash bank.
Hmm.
So here credit, so it would be debit over here.
Hmm.
Yeah.
Here you will write B's capital account. And then finally, your cash bank account would, okay? If your
We
cash
would.
bank account is tallying, then you close all the accounts.
Okay.
Yeah, tell me.
Okay, I got it.
Okay. We will do it. We will take it forward through the sums. But closing, you remember first which account you will close?
You'll close the realization account.
Realization account,
Transfer
then
the balance to partner's capital.
partner's capital.
When you
Yeah.
will close partner's capital, transfer the balance to cash bank.
Cash bank. Oh.
Those cash bank and cash bank should tally. Okay. So these
Yeah.
are all your journal. These are all your process of realization account. I'm directly taking you to a past paper question. Okay. So we would be
Hmm.
doing the past paper question of May, June 2017.